stock market experienced a strong rally with major indices posting impressive gains, signaling renewed investor confidence. In the United States, the Dow Jones Industrial Average surged past the 43,000 mark, climbing 485.60 points or 1.14% as investors reacted positively to the economic data and corporate earning reports. The broader S&P 500 also saw solid growth, rising to 64.48 points, that is 1.12%, while the tech-heavy Nasdaq outperformed, gaining 267.57 points, that was a rise of 1.46%, as the major technology stock continued their upward momentum. The Russell 2000, which tracks the small cap stocks, also moved higher, adding 21.22 points, that is 1.02%, indicating the strength in the smaller companies. Meanwhile, the volatility in the market eased, as evidenced by the VIX, that is the fear index, SBOE, the volatility index, dropping 6.72% to 21.93, suggesting that investor fear are receding and coincidence is improving. Also, in the Canada, the S&P TSX Composite Index rallied 1.22%, while the 298.82 points gain, while the S&P TSX 60, which tracks the largest companies in the country, advanced 1.07% with a 15.86% point increase. Also reflecting to the strong performance in the energy and financial sectors. In the Latin America, the stock markets followed the global uptrend, albeit with the smaller gains. Brazil's Bovespa index edged to 0.20% with the 247.76 points increase, supported by the strength in the commodities and financial stocks. Chile's S&P IPSA index gained 19.21 points, 0.26%, while Mexico's S&P BMV IPC saw the strongest regional performance, jumping 0.62% with a 324.68 point increase. The overall market sentiment remained bullish, driven by optimism around the economic growth, easing inflation concern, and expectation of potential central bank policy adjustment. Investors are closely watching the upcoming economic data and corporate earnings for future the signal for the American and the markets around the world. The commodities market experienced a mix of gains and losses today, with energy prices showing resilience, precious metal posting slight increase, and agricultural commodities maintaining a steady uptrend. WTI crude oil climbed 0.78% to $66.83, while Brent crude oil followed with a 0.74% gain, reaching $69.41. The rise in oil prices may be attributed to a combination of supply concerns, geopolitical tensions, and expectation of stronger demand as global economic activity remains steady. Additionally, production cuts by the major oil producing nations or disruptions in supply chains could be influencing the bullish momentum in the crude oil markets. However, natural gas experienced a decline of 0.61%, dropping to $4.42. This downward movement could signal weaker sensational and seasonal demands, increased production, or the higher inventory levels. Natural gas markets often react to changing weather pattern, with lower prices potentially reflecting a milder outlook that reduces the need for heating fuels. Precious metals saw minor gains, with gold edging to 0.22% to reach $2,932, and silver rising to 0.20% to reach at $33. The slight increase in gold prices suggests that the investors are still seeking safe haven assets amid economic uncertainties, inflation concern, and fluctuating interest rate expectation. Silver, often considered as industrial and precious metal, also saw a modest increase, reflecting steady industrial demand. In the agricultural sector, soya beans rose 0.67% to reach $10.19, also signaling strong global demand or potential supply constraints. Also, the weather condition in the key soybean producing region, trade policies, and shifts in the global agricultural demand can all influence the price fluctuation in this market. Overall, the commodities market remain highly responsive to global economic economic trends, supply chain dynamics, and geopolitical developments. The upward trend in the oil and the precious metals suggests continued investor focus on inflation, energy demand, and safe haven assets, while the dip in the natural gas reflects changing seasonal patterns. As markets continue to navigate uncertainties, traders will closely monitor macroeconomic data, central bank policy, and global trade development for further price direction.